Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Darrin Gross. Thanks for being on the show, Darrin.
Thank you, Whitney. Glad to be here.
Yeah, I'm honored to have you on the show. Y'all have probably heard Darrin's voice before, maybe heard his podcast before, which I would highly encourage you to listen to. But a little more about him. He's a commercial real estate insurance broker providing risk management solutions and coverage and premium negotiations on all new and renewal business. He is also a real estate investor and has 25 plus years of experience in the property management, multifamily, single-family rental, and commercial insurance industry, specializing in real estate investors' coverage needs. He's a host of Commercial Real Estate Pro Network podcast, which is designed to be a resource for investors and professionals engaged in commercial real estate. So, Darrin, thank you again for your time and sharing with listeners and myself. Give us a little more about who you are, what your focus is, and let's dive in.
Yeah, again, thanks for having me. And again, I just want to acknowledge what you've done. Your program, your daily program is, I don't know how you do it, but also just as a veteran, and then also as a parent of adoptee kids, I'm adopted as well, and I totally appreciate that.
Thank you, Darrin.
About me, so I'm based here in Portland, Oregon. And I'm an insurance broker. And ever since I got started, I've had the good fortune of working with real estate investors. Started off as just somebody that called in looking for insurance, and steadily grew into something that they kept buying properties, and so I got to learn along their journey. But also along the way, I recognized the power of real estate. And, started investing myself, my wife and I, we invest, and we have a small portfolio, but still just the identifying with what an investor is up against, and, the concerns they have. And we try and approach it from that way.
Okay. So, your specialty is insurance, correct?
Yep. No, that's it. And I'd say within insurance, real estate oriented insurance. Mm-hmm. So investors.
Yeah. And insurance is such a crucial part of being successful, right? I mean, you got to have it, right? You got to have it.
Yeah. I think that if you're borrowing money, your lender's going to require it,
no doubt.
Kind of thing. I think that most investors, it's not the first thought when you're thinking about a property. Usually it has to do with the, revenue, there's some sort of an expense metric, maybe on the back of a napkin, 50% kind of thing, and then go to a letter of intent. And then if I'm lucky, or if you're thinking about insurance, you might contact your broker right away. More likely it's closer to the end of your due diligence, and you're expecting Flo or whoever you saw on TV can give you a quote in 15 minutes to give you a quote. Only to find out that may not be the case, especially if you're doing any kind of value add properties. But yeah, we try and work with, not just multifamily, but also retail, warehouse, office, but primarily commercial real estate investors.
When should we contact you? I like having just a relationship. I mean, we're consulting with, insurance brokers really, very, very early on. If we feel like it's a property we're going to pursue, we're talking to them about the property before we have it under contract, even just so we can be that much more accurate with our numbers. But when do you say we should contact you?
Well, I would follow Whitney's model, your example there, and have a relationship with a broker. And, if you've got something that looks attractive and you're running the numbers before you, run a letter of intent or, write a letter of intent, just have that conversation quick. A couple things to know. The age of the property is usually kind of a starting point. and then what your plans are for the property, if it's going to be a heavy lift, or if it's more a matter of it's fully occupied and you're just going to, continue to operate it. But those are just two things. And then I think probably the thing that people don't realize that I would, if they take nothing else away from this, is if you're buying an older property and you are in that letter of intent and you understand that you're going to need to know what the seller's experience has been with that property. So you want to get a loss history. And that's not something that they have at their ready. They usually have to go request it. And depending on the level of service their broker provides, their insurance broker provides, it could be delayed, and that could delay you getting a competitive quote for your insurance. Because for a surprise, if God forbid there was a horrible loss that nobody, oh yeah, I forgot about that, and you've gone past your due diligence period and you didn't press that they had to give that to you, or you didn't ask for it, it could be a surprise. It could upset your numbers.
So we think we have, one number in mind for insurance, and then we get much closer, say, to closing, and then we find out that the seller had some other history or had some claims, and that really affects our numbers for insurance.
It can, depending on what it was, and if it's been rectified. If it's something that was an electrical fire because they had some sort of a problem that has not been mitigated, you may find out you can't get insurance, or at least something that would be affordable. But yeah, I think just knowing the few things that you're going to need and pressing that and adding that to your due diligence list can put you in a better position to have actual numbers so that you can hit your mark. One of the things that I hear and I read sometimes some of these Facebook groups and stuff is that people have this a number that they put in for underwriting per door, and I got to tell you, you're in Virginia, I'm here in Oregon. The weather, which is primarily the driver of insurance claims, is dramatically different across the U.S. Okay. In Oregon, we have rain. Okay. And, it's not going to blow your roof off. It's not going to, burn your house down. It's rain. If you've got a good roof, you're probably in good shape. If you go anywhere to like the Gulf states or, the coastal where there's more wind, or even the Midwest where you have tornadoes, hail, all of these different factors, they all affect the rate for insurance. So if you listen to this and we threw out a number I've heard is like $250 or $300 per door, you could be way off the mark, either pro or con. I mean, for out here, you may totally miss the number because you put too big of a number in your expense. Whereas, down in the Southeast, along the Gulf Coast, you may find out like, oh my God, this stuff's expensive. So all I can say is start that process early and get the information and communicate with your insurance broker and get an actual number.
I would think it still goes back to that relationship. I know, like, if we were moving into a new market, that's one of the things we're going to do is contact our insurance broker and say, these types of properties, or maybe even give an example. What should we expect? What is that? How would you handle that or suggest?
Absolutely. Is, start with that relationship, and, local is usually going to be your best option. Somebody that's familiar with the territory. I mean, they're kind of the eyes and ears of the insurance company. Having said that, we write in, I think it's like 43 of the 50 states. We have clients that have, properties out and about and stuff. And the internet is the World Wide Web. So we do get opportunities, and we just try and be focused and provide service to those, our customers.
Nice. So, we had mentioned a few minutes ago about, getting this history and finding that there's been problems that could affect our rates for insurance. And maybe we, if we didn't ask for that early enough, it could be late in the due diligence phase of buying this property, and it really, turned our numbers, upside down. So what, could that ever happen, say, after closing?
Yeah, the insurance companies have written in their policy that there's I can't remember if it's 60 days or 30 days, but if they bound coverage on something and then they go out and inspect it and find out it's absolutely not what they were told. Maybe the pictures were of the property across the street, just anything like that. It was thought to be this pristine property, only to find out it's anything but. The insurance company can send you a letter saying, "Hey, we're off. Here's your notice, 10-day notice. Good luck. We're out of here," kind of thing. So, absolutely. And, and even with that, like loss control, they can go out. I mean, most companies anymore, you've got the internet, you've got people on the ground, you've got people in the area that they can contact to go out and do an inspection. They're taking advantage of all those tools, and they're getting out and inspecting properties right away so they can avoid staying on a risk, waiting for the loss. They're exercising the contract to their benefit. And so at the very least, you're going to get a list of inspection loss control recommendations. It could be that the railings are not properly, or they're too wide, or they're lateral as opposed to vertical, or trip and fall hazards, or the fire extinguishers aren't up to date, or just on and on and on it goes. But the fact is that the insurance company, in a sense, they are your partner in a sense, is that they don't want to have a loss. If you recognize that's what their goal is not to have a loss, and you work to, keep them happy, more than likely your experience will be profitable, and you may have to spend some money to update certain things or correct certain things, but in the end, it should be a prevention measure as opposed to attracting, prospective loss.
Okay, so here's the simple truth. If you don't have private investors waiting on the sidelines right now, you're going to have a hard time closing your next syndication. Are you afraid to talk to investors? Do you feel you have a lack of credibility, or no one will take you seriously? Or what about your systems? Do you have anything set up yet? Well, if you know you can improve on getting in front of and influencing passive investors, then you should call my friend Adam Adams. Adam has a proven system for you to flip the script. Now, this is a 5-figure investment for you to take your business to the next level. I want to see you succeed, so I placed a link in the show notes for you to apply to work with the Adam Adams. And if you think you qualify and you know you're going to take action on what he teaches you, then scroll down, find the link, and take your money-raising abilities to the next level. Is there anything else that you suggest that we collect from the seller, just to get that information that we need, or everything that we need as far as insurance is concerned?
Yeah, I think just to kind of reiterate that the value add properties are probably the ones that I deal with most. I'm guessing the majority of the properties you've dealt with, or your listeners that are doing any kind of syndicating or dealing with as well. These properties tend to be older. They have some sort of need of capital improvement, maybe some deferred maintenance. And the insurance companies know that most of the systems, and the systems being, there's 4 basic systems. You've got your roof, electric, heating, and your plumbing systems. They have a limited life expectancy. And so at 30 years, most of the companies I deal with, and I think nationwide, most companies are looking at and saying, look, your roof needs to be replaced if it hasn't been. So when you're dealing with the seller, if you can find out the most recent date of these 4 systems that they've been updated or replaced, you'll be much further ahead. And then even have your inspector verify that, whether it be at the electrical panel, if they can see an installation date, or a furnace, if it's a furnace or a boiler. I mean, if it's, what am I trying to think of? What's the heat? The electric, I can't even think what it is now. Just on the wall there plugs in, it's the electrical thing, and they flip the switch and it's on, off, kind of thing. If it's that kind of thing, then it's not a big deal. But your electrical system is probably one of the ones that we're running into more issues here as of late. There are some panels out there that are known to be problematic. There's a Zinsco and a Federal Pacific. Used to be everybody was worried about knob and tube or fuses or aluminum wiring. All of these can be problematic, but knowing those things before you make your offer, and then also having an idea of what it would cost to correct, can really help you, in position yourself in a position of strength, both with a negotiation and also with no unexpected surprises. And also, if there is a period or an insurance company will not accept the property in its current condition, but you have bids to correct it, and you have a contract with a provider to correct it right away, you might be able to negotiate coverage with the understanding that these are going to be corrected right away. Does that make sense?
It does. Yes, and you mentioned like the electrical panels, or with the electrical systems, you're having problems with those right now, or you're noticing more problems, or I guess as these properties are aging, that cycle of properties anyway for value add. What are some other problems that you're seeing that maybe we should pay closer attention to?
Well, I think a couple of things that I would encourage everybody to consider is more of an operational thing that and let me point to where this is coming from. I think we're finally to a point where insurance companies are able to quantify and use all of the data they've collected, for years and years. For years and years, we've been inputting this data into the computer. Nobody has really understood what we're inputting or why. But I think now there's just so much data that you've got data scientists that are looking at it and saying, hey, look, this is a problem and we can correlate it to this. Two things that I'm seeing where you can probably save yourself some money is if you are taking over a property that allows smoking and you instill a no smoking policy. You'd be surprised. I think a lot of insurance companies, if they know that, they may provide you a no smoking discount, okay, provided it's in your lease and that you enforce it. If you're a landlord that believes like, well, our tenants, that's just kind of who they are and we don't want to chase them off, then, that's your choice. But just know that is something you're probably going to attract a higher caliber tenant if you enforce these simple things. So non-smoking, one. The other thing is renter's insurance, requiring renter's insurance from your tenants. This provides a means for you, should your tenant cause a fire or a claim, to collect rather than having to go against your own insurance policy to, fix the problem, the fire. I've got one client here locally that for years just resisted and said, oh, I'm not, blah, blah. Finally, they elected to require renter's insurance. And I guess it's been a couple of months ago, I was out visiting with him and he goes, you know what? We've had 3 kitchen fires this year. And I said, you've had 3 kitchen? He said, I haven't had to call you once, because each time the renter insurance took care of it. He's got a larger portfolio, but still it was kind of unique because, what an insurance company looks at when they're trying to price your business, your renewal, is they're looking at frequency of loss and the severity of loss are typically the two things that they look at as far as pricing a risk.
So if he had to have claimed those 3 kitchen fires, his premiums would have gone much higher, wouldn't they?
Yeah, I don't know the extent of and he runs with a pretty high deductible, so he might have been eating those himself. Right. But still, I mean, that's money from the bottom line, whether it be in deductible or higher premium, right? And if you can transfer that risk to your tenant, who's the cause of the problem, all the more better, right?
Yes. So, Darrin, I guess changing tracks here a little bit, but as far as the listener, or even myself, when we're looking for that new insurance broker, I thought maybe you could provide a few questions that maybe people forget to ask when they're selecting that team member, that's going to provide the insurance. Some things that maybe we wouldn't even know that we need to ask.
Well, I think experience is probably your first and foremost. I mean, what's their level of experience working with investors? I didn't know what syndication was, only to find out that I've been working with syndicators for years. I didn't really understand how real estate was purchased. I knew who I was working with, but I didn't know how they structured the deal. But anyway, I would say experience with insuring properties would be primary. And then I think also access to markets, especially if you're dealing with value add properties. It's one thing to have a brand new property or a newer property that, has new systems, is all up to code and needs no value add, capital improvement kind of thing. Those are pretty vanilla, and most every company available would be, pick me kind of thing. But if you get into an older property that's in need of some capital improvements, your list can shorten. And so if you're with somebody that doesn't have access to, viable companies that can limit your, ability to work with that person just based on their ability to place coverage.
And how negotiable is that quote that we get?
Well, I mean, insurance is it's a guess. I mean, it's kind of like, the insurance company, they've got a floor, the lowest price they'll write. The first price they might offer you might be a little more, hoping that you don't have any lower number kind of thing. But having said that, it's no different than when you go out and make an offer on a property, right? You've got your maximum that you're willing to pay, but you're probably not going to start with that number. You're going to start with a number where you can hopefully give you a little bit of room if you need to sweeten the pot, right? And so similar, there is that, piece to it. But I think, though, the more experience you have and the more of a relationship you have and the more you have to insure is going to be more of your leverage. If you have just one property and it's a smaller property, you're not going to, you don't have a lot of leverage, right? But if you've got a portfolio of a couple thousand units and you've got a perfect loss history and you're known to be acquiring more properties and, you are in the driver's seat at that point, more so than the guy with one property. Okay. But, some people say, you better sharpen your pencil. I'm just like, I never come to the deal with trying to hide a little bit, because I figure, like, look, I'm trying to win, period. Just to go out and do this for exercise doesn't pay. I try and win on everything. So we go to multiple companies every time, and we try and present a comparison between the companies we went to and break it down on, line by line coverage. So you can see, where one company is stronger than another. Just a couple of quick things here. Loss of rents is something that I don't think it is totally understood. It's usually, I think most companies give you like 12 months loss of rents, but on the labor market you're in and demand, I've seen it here locally take as much as 18 to 24 months to get your property put back together, depending on the size of the loss. So that's something to consider. But I would say, again, just to answer your question, experience and markets would be the primary things there.
Well, a few more questions before we run out of time, Darrin. And you as an investor as well, how are you prepared for this potential downturn that everyone's talking about?
Let me answer that based on insurance, just with hard market. The insurance is cyclical, just like real estate. And if you take note of a lot of the environmental or climate-related claims, whether it be floods or significant storms and stuff, insurance companies are believers in global warming or climate change or whatever you want to call it, because they're paying the claims, right? And what most people don't understand is that the insurance policy you buy from the insurance company, they buy insurance on that. So if you've got $1 million building, they're probably in-house taking the first $100,000 or $200,000 worth of risk. And then they go buy the balance of that from another insurance company, which is called reinsurance. Well, most often those reinsurance companies are fairly protected from the loss. But when that loss goes to $1 million, the reinsurance company's paying. And if they get hit a lot like they do with these, fires and floods and whatnot, we're starting to see a market hardening. And so what I would encourage everybody to do is kind of like what we've been talking about, is start early talking with your insurance broker and be aware of what you have and communicate with them and ask them, what do they need to get you the best quote? If they need a form, fill it out and get it back to them. But they ask, you get the answers. And then also understand what your coverage is, to where if there's something you're willing to do without, or if there's a higher deductible that you might be willing to take on to contain your cost.
Darrin, what's the number one thing that's contributed to your success?
Probably, experience, just doing it more and more. I mean, I've had the good fortune to have, customers that are acquiring properties and, learning the difference between the coverages and being able to, provide them different options and just continue to, I would say, just practice, that's probably it right there.
And tell us how you like to give back.
I do like doing the podcast, I think so often people think that you're doing something to make a sale or something like that. The reality is, at the end of the day, if I can help you save something or make a better decision, that's a win for me. Love talking with investors and that's probably it.
Darrin, tell people how they can get in touch with you and learn more about your podcast.
Yeah, so my podcast is called, like you said, Commercial Real Estate Pro Network, and it's a weekly podcast. We interview investors and professionals, and we talk about how to grow your real estate portfolio, asset management, and risk management. And so that, and there's you can also go to my website. It's the letter J, Darrin, Darrin, Gross, GROSS.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.